Last week, I called a top signal on silver, a signal that has only appeared 4 times in 60 years. I was wrong. Or, at the very least, I was early. And in trading, being early and being wrong feel exactly the same, until they don't. Welcome back to Schooled by Market. I'm glad you're here. If you've been following this channel, you'll know that last week I shared an analysis on silver, specifically a rare quarterly RSI signal that has historically suggested a major top was forming. I called it early. The latest quarterly candle close has now changed the picture. And simultaneously, over in the world of crypto, Ethereum's 2-week chart just did something that slightly undermines one of the bullish signals I had been tracking. But, and this is important, only one of 3 signals was affected. The other 2 are still very much alive. So today's video is structured in 2 halves. First, silver. We'll look at what the latest quarterly close means, what history says about where we go from here, and what the 2 possible scenarios look like on the 2-week time frame. Second, Ethereum. We'll go through the 3 bottom signals, assess what's intact and what isn't, and then zoom out to the broader macro picture. Fear and greed, the Clarity Act, oil, quantum computing fears. A lot to cover. Let's get into it. Let's start with silver. In my earlier analysis, I flagged a quarterly RSI signal that has only appeared 4 times in 60 years, a reading that has historically preceded a major top in silver. When I saw that signal forming, I flagged it. I thought the top might be in. But here's what happened. Silver's quarterly RSI closed above 85. That single candle close changed everything. Why? Because in order for the top signal to confirm, the RSI needs to close below a certain threshold. By closing above 85, silver essentially said, "Not yet." Now, this isn't a green light to go all in on silver. It's more nuanced than that. What it means is that we now need to look at history through a different lens. Instead of asking, what happens after a top signal, we now need to ask, what has silver done historically when it spends multiple quarters above RSI 85? In the past 60 years, that has happened exactly twice. First, 1967 and 1968. Silver spent 5 consecutive quarters above RSI 85. 5 quarters. That's over a year of sustained extreme momentum. Second, 1979. Silver spent 2 quarters above RSI 85. Shorter, sharper. 2 instances. That's all the data we have. But history, even with a small sample size, is still a teacher. And if the market is teaching, we should probably take notes.
Now, to understand how much upside might be left, if any, we drop down to the 2-week time frame. And this is where things get interesting. The 2-week chart gives us a clearer view of how silver topped in both of those historical periods. And the 2 topping patterns are meaningfully different from each other. In 1967 and 1968, silver topped with what's called a bearish divergence. Price was making higher highs, but the RSI was making lower highs. The momentum was fading even as price pushed up. That divergence was the warning. Now, here's the detail that matters. From the point where the RSI peaked, silver still managed to rally another 34% in closing price terms before the real top came in. 34%. That's not nothing. If that pattern were to repeat today, and I'm not saying it will, it would imply a potential test of the $120 level in silver, possibly slightly above the wick we saw back in January. That is the best-case scenario. Now, let's talk about the other scenario, the worst case. In 1979, silver topped without a bearish divergence. No warning. Price peaked, and that was it. So the question becomes, which pattern is silver following now? Here's the clue that both periods share, and this is your key signal to watch. In both 1967-68 and 1979, the top was confirmed when 2 things happened simultaneously. Price fell below the 20 simple moving average, and the stochastic RSI crossed into bearish territory. When both of those conditions were met, the top was in. There was no ambiguity. Here's where it gets slightly uncomfortable. Right now, on the current 2-week chart, the stochastic RSI is already trading in bearish territory. That doesn't automatically mean the top is confirmed. Silver would need to mount a meaningful rally this period to pull that stochastic RSI back into bullish territory, but the clock is ticking. The best case, silver makes one more push higher with bearish RSI divergence forming and gives us a final 34% extension before topping. The worst case, the top is already in, and it could take years before we see $120 again. The market is teaching. The question is which lesson this is.
All right, that's silver. Now let's cross over to Ethereum, where the picture is different, but the level of nuance required is just as high. While silver was busy avoiding a top signal, Ethereum did something in the opposite direction. It closed a 2-week candle that partially invalidated a bottom signal I had been tracking. Partially, not fully, and that distinction matters a great deal. Let's go through the 3 signals I've been monitoring. Signal 1, the RSI 40 reversal. Historically, when Ethereum's RSI on the 2-week chart reverses from below 40 back above 40, it has been a strong indicator of a bottom being in place. The price action that followed those reversals has been consistently bullish. In the recent candle close, ETH's RSI crossed above 40 and then closed back below it. To be precise, it closed at 39.23, just barely, a fraction below the threshold. Now, I could say the signal is broken and leave it there, but that would miss something important. If we zoom out and look at the macro structure of the RSI, not just the 40 level in isolation, what we see looks remarkably similar to 2 prior historical occasions where the RSI was in a prolonged downtrend, broke out of that downtrend, and then came back to retest the downtrend line from above as support. In both of those prior cases, that retest was followed by a sustained rally in the RSI and in price. Is that what's happening now? Possibly. The setup is there, but we need to see follow-through. One signal, partially invalidated, but not without a silver lining.
Signal 2, ETH versus silver, relative strength. This signal remains fully intact. On the weekly chart, ETH priced in silver, meaning ETH's value expressed relative to silver rather than USD, has shown a clear RSI reversal. The RSI crossed from below 32 back above 32. It has also crossed above its own moving average. The stochastic RSI on this chart is now in bullish territory. The MACD has flipped green. These are multiple layers of confirmation for one core idea. ETH is showing relative strength over silver. And here's why that matters in the bigger picture. If silver still has room to run in USD terms, as the best-case scenario suggests, then ETH showing strength over silver implies ETH could see even more dramatic moves in USD. This signal is not just intact, it's arguably accelerating. In fact, if you compare the current price structure with the bar pattern from November 2016, ETH appears to be running slightly ahead of schedule. Signal 3, the Mayer multiple. Historically, when the Mayer multiple for Ethereum crosses below 0.6 and then reverses, that has been a strong signal to suggest the bottom is already in. In this recent weekly close, I am glad to announce that the Mayer multiple remains firmly above 0.6, and that means the signal remains intact. 2 out of 3 signals intact, 1 weakened but not broken. Taken together, the weight of evidence still leans toward ETH having found, or being very close to, a meaningful bottom. Now let's pull back even further and look at the broader environment. because technical signals don't exist in a vacuum. Sentiment matters. And right now, sentiment is deeply, historically bearish. The Fear and Greed Index, specifically the 90-day moving average, which smooths out day-to-day noise, has fallen to a level of fear that has only been surpassed once in recent history, and that was during the depths of the 2022 bear market, the FTX collapse, the absolute nadir. Think about that for a moment. Back in July 2022, Bitcoin was trading around $19,000. The 90-day moving average of the Fear and Greed Index was sitting at 19, and the only reason the market kept falling from there was FTX, a black swan event of extraordinary magnitude, a fraud that shook the entire industry to its foundation. Without FTX, the case can be made that $19,000 Bitcoin was already the bottom. Today, we are approaching that same level of fear without an equivalent catastrophic event on the horizon, which raises a question worth sitting with. What would it actually take to push prices materially lower from here? There are headwinds. Let's be honest about them. The odds of the Clarity Act, the U.S. cryptocurrency regulatory framework, passing in 2026 have now fallen below 50%. For context, this piece of legislation has been seen as a significant catalyst for institutional adoption. Markets had been pricing in a relatively high probability of passage. That probability is now near a coin flip. That's a meaningful shift in expectations. There's also the quantum computing narrative. Google's research has surfaced concerns about Bitcoin's long-term cryptographic security. The headlines are dramatic. The actual timeline for any real threat remains distant. But in a market already saturated with fear, new narratives, even speculative ones, carry extra weight. And oil prices remain elevated. The US-Iran conflict drags on. Macro conditions are not supportive in the traditional sense. And yet, despite all of this, the regulatory uncertainty, the quantum fears, the geopolitical noise, the extreme fear in sentiment indicators, ETH's price is not making new lows. That is a quiet form of strength. When bad news stops making prices go lower, the market is telling you something. Let me bring all of this together. On silver, the top signal I flagged earlier was premature. Silver avoided that signal by closing quarterly RSI above 85. We now have to look at the two historical precedents, 1967-68 and 1979, as our reference points for what comes next. The best case is a repeat of 1967-68. A bearish RSI divergence forms. Price makes one final higher high, and silver extends another 34% or so before the real top arrives. The worst case is that the top is already in. The stochastic RSI on the 2-week chart is already in bearish territory. If silver fails to rally convincingly, years could pass before we revisit current levels. The risk-reward for buying silver at current prices is not compelling. The parabolic move appears overextended. I'd want to see clearer signals before adding exposure here. On Ethereum, one of the 3 bottom signals I've been tracking was weakened, the RSI 40 reversal, closed fractionally below 40 on the 2-week chart. But the other 2 signals remain intact, relative strength versus silver and the Mayer multiple. More importantly, ETH is holding its ground in a macro environment defined by extreme fear, regulatory uncertainty, and external shocks. That resilience is a signal in itself. The risk-reward on ETH, in my view, remains more attractive than silver at these prices. The broader picture. Expectations are low, fear is high, prices are not going lower. That is a setup where a positive surprise, a resolution on the Clarity Act, a de-escalation in geopolitical tensions, any meaningful shift in macro conditions could produce a sharp, dramatic move to the upside. Not a guarantee,
never a guarantee, but the asymmetry favors those who are positioned.
Markets are not kind teachers. They don't slow down when you fall behind. They don't repeat themselves. They don't explain their lessons after the fact. What they do, if you're paying close attention, is leave patterns, signals, echoes of the past embedded in charts that stretch back decades. Silver spent 5 quarters above RSI 85 in 1967 and 1968. It's happening again now. ETH's RSI structure, right now, looks like 2 prior moments that preceded major rallies. Fear is at levels last seen at the absolute bottom of the 2022 bear market. The market is teaching. The question, as always, is whether you're listening. If this kind of analysis is useful to you, please hit subscribe. Every video on this channel is built around one idea: understanding what history is telling us before price makes the move obvious. Leave a comment below. Are you bullish or bearish on ETH and silver from here? I read everything. And if you want to go deeper, my earlier silver and ETH analyses are linked in the description. They'll give you the full context behind the signals we discussed today. Until next time, the market is teaching. Are you listening?